How's it going, everyone? In this video, I'm going to be going over how to pick the appropriate option for the trade. Kind of give you my thought process, what to look for, what to stay away from. Um, but before we get started, as always, be sure you're subscribed to my channel. Click that thumbs up button and click that bell icon so you don't miss out on any of my upcoming videos. For this example, we're going to look at AMD, ticker AMD. It's Advanced Micro Devices, a chip in the chip sector. But anyways, I have this week's expiration pulled up. As you can see here, June 17th, 2020. So these will expire this coming Friday. You got the calls on the left, puts on the right. Now, the current price of AMD is 83.17, as you can see here on the ask. So, first off, if I was looking to trade this, I would try to stay close to the current price. So I want to be right at the money. I don't want to be in the money personally for a day trade. I like to be out of the money. Then I like to look at the volume open interest when I'm choosing my options. As you can see here, this 85 obviously has the most open interest and the most volume, the most liquidity out of all of these that I see here. If we come over to the put side, the 80 put has the most open interest and the most volume. So that tells us that, chances are we're going to be able to get in and out of these trades quickly, get our orders filled quickly. Now, let's take it just a little deeper. Let's go and look at the Greeks. So now the 85 has a $35 Greek. So with each $1 move up, you're going to make $35. I like to keep the delta above 30 when I'm day trading, preferably. As you can see here, the 84 has a much better Greek at 45, and the open interest and the volume was very good on all these. All these are tradable. Shouldn't have an issue trading any of these. These are a little more expensive because they are closer to the money, to being at the current price of AMD. But the spreads look good. The spread is the difference between the bid and ask. You can see there we got like a $2-3 spread. This is some things I look for. You don't want to be trading something that has very low volume or, no open interest. And if the spreads are too wide, you're going to open in the red. So you don't want to do that, obviously. And people ask me, what's a good rule of thumb for spreads? Something on AMD, something smaller like this, $10 would be pushing it. But something like Tesla, $10 would be normal. It just depends on the size of the stock. The more experience you get, the more feel for trading options. You'll come to understand this a lot better. Let's look at one more thing before I'll let you all go. Let's look at the implied volatility. You see, actually, this is rather high for AMD. You got an 88.3% implied volatility. What happens, the higher the implied volatility is, the more expensive the option that you're purchasing is. If you have real high IV, your option is going to be overpriced. And that's what you want to stay away from. Not so much on day trade, but if you're swing trading this, holding this overnight, I keep a rule of thumb. I don't like to hold anything overnight. This ain't always the case, but in most cases, if it has a IV of 90% or higher, I tend to stay away from it as a swing trade. You can get away with it in fast scalps or day trades, but if you're going to hold it any amount of time, keep in mind, if that IV comes down, you will lose money automatically, regardless of what the price does. Unless it just rips up in your favor, then you could still end up being a winning trade. This is just a few tips. If you have any questions about this, feel free to reach out to me. If you need more in depth on this, I have a complete options trading video recorded. I did this live, so people were asking questions, I was answering them. But yeah, I appreciate you all for watching, and I will catch you next time.